see it on your side. Okay. Do you see where it says you are live? Do you see that?
It says the broadcast is live.
Maybe it's live. We don't know. I don't trust technology. And
Okay.
I just feel like they're trying to like suck me in. You know what I'm saying? They're trying to bring me in. So what I do is this. Because we're on Twitter Live, right? And we're actually also
Yes.
on YouTube. We're also on YouTube. And see, Janan is here, right? Janan is here, maybe. So what I do now is I've got two laptops.
Okay.
I'm moving up. Okay. It's been a long time, Barry. I'm moving up. I've got two of these things now.
Two's better than one.
So now what I do is I go to my Twitter feed. Okay. So I've got to type in my Twitter feed. Okay. So I go to Twitter. You're not on Twitter that much. You should be on Twitter.
Can't do everything, Adam.
If you were on Twitter, you'd probably block me. You're better off. All right. You'd say you probably
only if you were telling me every 5 minutes to buy Bitcoin. That's it.
But I did tell you to buy it. Okay.
Every 5 minutes.
Okay. I did. So now I don't see us yet. Okay. I don't see us. Okay. I don't know why. And even if I did see us, I don't know. So now what I do is I have to refresh. So what I do is I'm refreshing. I'm pressing the button. I press F5. Do you press F5? How do you refresh? What's your trick? What do you do?
I go refresh up at the top. That's all.
F5.
It's a circle. Just click on the circular thing.
You see? F5. F5. Okay. So now what I'm doing is I am trying this. I'm F5ing like a lunatic on this thing now. I'm like that person at that stop sign that keeps on pressing that button, right? You know that?
You're that guy?
I am that guy, or that person at the elevator. So now what I do is, Barry, we did it. We did it. We are live.
All right.
Now what I do, because you haven't seen any of these, right?
No.
Your assistant has seen maybe one or two of them, but you haven't seen any of them, so you have no idea.
I have no idea what I'm about to expect.
Okay, so if you haven't seen these, do you like my music?
Yeah, I do. It's kind of catchy.
It's calm, right?
I'm particularly impressed that you actually know the words.
Yeah. Nancy and I do. This is the Hanuman Chalisa, and we chant it very, very frequently. Mm-hmm. And I've actually did an investor series Periscope about the Hanuman Chalisa and about the importance of meditation and investing, and a meditation in kind of contemplation of the future. Because if you can't appreciate them today, you can't appreciate tomorrow. So hold on, watch this. I still hear in the background. You can't hear. Barry, we did it. We're live.
Glad to be here.
And I'm so glad you're here also. And I'm so appreciative also that I think I just pinged you a few days ago. And I said, Barry, let's do this. And then you said, cool, let's do it. And I didn't get back to you for 3 days, right? That was messed up. I didn't get back to you.
No, that's okay. It's okay.
We're friends. So that gives me a little bit of like,
Everything goes. When you're friends, everything goes. It
does. And the last time I saw you, you lived in New York City. So this is going to be really exciting. It's our chance to catch up. And it's also our chance to discuss you and Newtek. And because you really are Newtek, you've always run it kind of as a lifestyle business almost. I mean, you've always been very aware of how you wanted it to be run. And the tyranny of running a successful business is also something. You want to get that?
No.
Okay, so we're live, and would you be kind enough to introduce yourself? Would that be all right?
Adam, my pleasure. So, and thank you for having me. Barry Sloane, friend of Adam Townsend's for, I'm going to say, 2 decades. Grew up in Brooklyn, New York City. Worked most of my career on Wall Street in the mortgage and asset-backed securities industry. And then in 1995, at a spare bedroom in a New York City apartment, founded what is now known as Newtek Business Services Corp. We went public in September of 2000, converted to a business development corporation in 2014. And glad to be here today talking to you about business, the economy, and whatever floats your boat.
Yeah, and let's start off with we've known each other for 20 years. We've known each other since my Insperity days. Now it's called Insperity. Back then it was called Administaff.
Administaff.
Yeah, and
Administaff.
that business boomed, right? It did good.
Yes, it did.
I know it did good, and
you do have a Midas touch.
I do, and that brings us to today because I've discussed in other kind of conference, another investor series, and another stuff that I do, how I've acquired kind of a system view, and you were part of that. So I thought this would be really fun before we even got into Newtek, which we're going to get into. But I thought it would be fun to go backwards a little bit and some of the lessons I learned from Newtek. You want to hear them?
Yeah, I would like to hear them.
It's interesting, right? I learned how your thought was to manage, to have line managers. The way you thought of everything as kind of factories, and you thought of people as line managers, right? And rather than kind of little empires within them, you really did manage it. And the people you chose as line managers also appreciated their role within that they needed to have their own, that they were kind of siloed out. And it didn't, as much as it would have been it would have been great to kind of cross-pollinate from one product service that's complementary to another. We both also learned together that the amount of human intervention required to do that is sometimes there's a diminishing return to it, right? That no you can question. Have two complementary services, and we'll talk about what Newtek does. But at the same time, that doesn't in any way give an ability to forecast out that one client is going to also adopt another type of service.
Absolutely accurate. Yep.
So those are two lessons that I learned. There's a whole bunch of them. The lessons that I learned. So could you give a description of kind of the genesis of Newtek, because it really has been a remarkable story, right?
Well, Newtek is basically, it is a labor of love. It's a passion. After being in the mortgage and asset-backed securities business and observing an industry grow that originally started off with incredibly wide margins and small amounts of volume and just proliferate, when I left Wall Street in '95, what I wanted to do was something that was sort of equally important. If you think about the whole world of capital markets and finance, the mortgage-backed securities market, debt finance, it just exploded, and that's helped economies all over the world and businesses all over the world and people all over the world. So when I left Wall Street, I said, gee, I want to do something that's equally as important. And I kind of literally out of a spare bedroom New York City apartment tried to work with small and medium-sized businesses because they didn't have access to state-of-the-art business solutions or finance. And that's what really Newtek is. It's built on the genesis of supporting a U.S. economic demographic that represents 50% of non-farm GDP, 9 out of 10 businesses, and approximately 40% of people in the United States are employed by small and medium-sized business, something that was clearly exaggerated by the pandemic. All of a sudden, the pandemic showed, oh my God, these restaurants, these dry cleaners, these gyms, these beauty salons, all these businesses involve small business, and they suffered due to the pandemic because many of these businesses didn't have the opportunity like you and I are doing right now, communicating remotely and being able to do that. So this is something that I've really enjoyed over 23 years. I'm passionate about it. Hopefully this is something that expands globally at some point in time. Right now we're trying to perfect it in the domestic United States.
And do you see, and now that we get the conversation gets to drift a little bit because I'm so interested, do you see kind of the consequences within your merchant processing clients? And if you want to describe the various lines of business, because it is very interesting. And then are you seeing, and that's something else I learned about when I, in our relationship, I learned about carrying risk, particularly within your merchant processing, how to mitigate risk, and that the CEOs, not only is their job kind of the chief salesperson sometimes, but it's also the one who has to, you've got a lot of people yelling in your ear, right? And yes. You've got to know how to take it in and kick it out, right?
The Bastille gets stormed on a regular basis, and a lot of people with divergent thoughts and needs have things that they want to get done immediately and come to the front of the line. And in my seat, we now have 420 employees. There's a lot of different risk managing functions, a lot of delegation. Company's grown significantly since you were inside of our walls, and it's been real fun watching it grow. One of the things that we've seen in the payment space, which you were alluding to, there are businesses in the United States that are hurting real bad, and many of them are flourishing. And you could see that, from the payment processing perspective. And you take a simple thing like a restaurant, for example. There are restaurants that are doing just great. The ones that are doing pickup and delivery, curbside pickup, restaurants really had to adopt. Matter of fact, down here in Florida, there's a restaurant that has really flourished from the pandemic because they were able to expand their universe with outside table sitting. So the mall that they were in allowed them to go further and deeper than they ever were before. Things are closed up. They're doing more business now than they did prior to the pandemic because they figured out a way to manage it, how to adopt, how to serve people safely. And then you add that delivery and curbside pickup to making really great food. The margins are super without the overhead. And we're actually seeing that with the concept of the real estate footprint. I have an opinion that the real estate footprint will continually shrink, particularly for office space and retail and things of nature. It'll ultimately get filled up by residential and other uses, but yeah, the real estate footprint's going to shrink. That's going to be a very interesting dynamic, I think.
Wow. Okay, so let's actually drift again. Right now, would you be kind enough to just kind of explain the business segments that you've got?
Sure.
And, that would be really, really helpful because you guys are kind of a conglomerate almost.
Well, yeah, we are a conglomerate. When people use that word, it goes back way back when to these big corporate conglomerates that just bought different businesses that didn't necessarily connect. One thing, the common thread with our different businesses is we service what I refer to as an independent business owner. So the 5 silos, as I refer to them, we finance business through lending. We have a variety of different lending products. We do payment processing. We give the ability for businesses to be able to take electronic payments, which may include Bitcoin or ACHing or any kind of currency between 2 parties versus paper currency and checks, which are just going down to the nub. Then you've got the concept of our tech solutions unit to be able to basically allow people to compute mobilely, to use dumb terminals, whether it's virtual desktop, to have disaster recovery, security, storage. The best way to think about what we do is we're like a mini Amazon or a mini Azure, but the Amazons and the Azures are really good for big clients. They don't really handle middle market or smaller clients well. And then we've got our payroll, health, and benefits, a very complicated space that you're very familiar with, obviously, with your knowledge of PEOs. And then the insurance segment, also in dire need of help, where the model of the insurance agent coming to your house, taking you out for breakfast, lunch, or dinner, golf, that doesn't happen anymore. Geico broke the mold way back when all the sales were done in-house, 800 number, clever commercial, the lead flow comes in, they book and bind. That's what we're doing in the insurance space. And carriers are going to wind up, in my opinion, ultimately doing that business directly. The internet is the great sales disintermediator. It's going to shrink the necessary requirement of a human function to close a deal, bring a message, or deliver products. You could do that through the internet. You could do it. That's the great disintermediator. I hate to say it, being a salesperson, and as you could tell, it's quite talkative. That skill set's becoming less and less desirable and important in the current economy.
And so within those lines of business, you're also doing the small business lending, right?
Yes.
And
yep.
Yeah.
We're the largest government guaranteed lender as a non-bank in the United States, 3rd largest as a bank. So the SBA program, which 5, 10 years ago was thought of as this lesser tier, poor man, lender of last resort type of funding. It's become quite mainstream, and the government's payroll protection program was administered by the SBA infrastructure. So we like to think of ourselves as the partner to the government. We think we were vital infrastructure to coming out of the pandemic. We did 10,500 PPP loans last year, over $1.2 billion. We'll not exceed it in volume, but we'll exceed it in units this time around.
And how do you acquire those prospects?
So, once again, the concept of disintermediating the human salesperson that goes and visits a client and buys them a cup of coffee or whatever salespeople do. We use the internet. We use a referral infrastructure where the lead comes to us, and we give full transparency to entities like Morgan Stanley, UBS, Stifel Bank, Navy Federal Credit Union, Meineke Muffler. These are entities that have customers that need our services, and it's not what they do. They're not providing those solutions. So they drive them to us. We give them full transparency into our back office so they know what we're doing is great for their client. And we do pay them, obviously, a piece of the revenue stream, but it's a great model. We reported our annual earnings recently. We got 320,000 business referrals last year, almost 180,000 in the fourth quarter. We're getting close to 4,000 or 5,000 a day right now. A lot of it is PPP related, but we've got, and importantly, this isn't, pay per click. This isn't digital. The lead flow is coming to us for the purpose of us being able to provide a service, and if we're successful, then we pay. Otherwise, we don't pay. But all those customers wind up in our database.
And which are the most successful channel partners to you? Not specific to which one, because I understand there might be some reluctance to share that. But in terms of kind of the industry of it, where are those leads coming from?
The financial services segment is the segment that we have had the most success with in terms of getting lead flow, because they want the deposits, they want the stocks, bonds, the assets, and they allow us to provide the service. And however, I do believe that down the road, the technology providers, as well as the Amazons and the Googles that have got these databases of clients and the ability to connect their client with our solution-based company are going to be great lead feeders as well. So we look to expand in that particular area down the road.
And before, and this was a decade ago, right? Because we're old timers now. You would have a channel partner, and then you would also allocate some human capital resources to them to getting a lot of face time. And that's something I learned with Newtek as well. Is I don't like strategic partnerships because they can really drain resources. They're good for part PR. They're good for marketing. We all understand there's a need for these type of things, just to let shareholders and people know that the company is continuing to engage. Right, very important thing. But then there's also the allocation of resources and building too much anticipation of the success of these channel partners. And one of the things that Newtek did very early is it allocated a lot of human capital to really putting, I don't know if I would call them salespeople, but channel managers sitting at the desks in some cases, constantly reiterating the message. So if you couldn't be the highest bidder for some of these referrals coming in, you were certainly going to be top of mind just because of proximity and kind of an emotional engagement.
Well, I think today, Adam, and this has morphed a little bit, we perform webinars for their channel partners and their customers. We create videos, whether they're white labeled with their name or using our name. We do digitized marketing programs for our channel partners to get those messages out. And I think for a financial institution that doesn't do SBA loans, or won't do virtual desktops for. I might speak to software vendors, and they're not going to talk to somebody with 300 seats. That's considered beneath them. Well, we'll do it. So we'll deliver the software. We'll set them up. We'll manage it 24/7. They got a help desk. We'll make sure that it's secure. So this is how these alliances work really well. We're set up to deal with independent business owners and their clients. And for channel partners, we've got complete marketing programs. So our viewpoint is, give us access to your customer base. We will make you look great in that endeavor and continue to manage the relationship that you want, and we'll provide and wrap the total solution for that client.
And is there ever a time that Newtek becomes more client-facing than the channel partner?
Yeah, it's a good question. I mean, we do, on certain occasions, visit clients directly. I'm talking about the end client. We always visit channel partners, but there are times we'll visit the end client if there is a need or a service that requires an on-premise visit. We will do that. Oddly enough, one of the questions we get asked a lot is, when you make loans, do you have to go on site? And the answer is no. We do have third parties that will do appraisals to appraise real estate or maybe appraise a business. But what we do does not require an on-premise visit. Business owners today, they're very busy. They don't want to be bothered between 9 to 5, Monday to Friday. They want you when they want you. If that's in the evenings, that's on the weekends. They want to be able to contact you through the internet. They want to be able to go to your website and understand your products based upon what's there, look at videos, or pick up a phone and speak to somebody 24/7. And that bar or restaurant owner whose point of sale system goes down, at 11 o'clock on a Friday night, and they've got customers, they need to be able to take payments. They won't be able to talk to somebody. Or for that matter, someone's got a problem with a website in one way, shape, or form. I will tell you, recently, my cell phone rang. It was like 5:45 on a Saturday morning. It was a physician from a hospital in New Jersey, and he was having problems with his software. He couldn't get these reports that he needed for COVID patients for testing. I picked up the phone. I contacted my group, but he happened to have my phone number. He happened to know me. Now, the problem was they wound up doing some software development, which messed up our server. So once we knew what they did, we were able to get them back online. We were able to get the reports out. Customers happy. We're happy. But you wouldn't think that, a hospital is considered, a small and medium-sized business or a middle market company. But the reality of it is they can be.
So I want to go back. This is very selfish of me, right? Because I do these really for me. Isn't that messed up? I did them for me because I miss you, man. And if you were here, we would have dinner, right? We would have
absolutely. Dinner. But you wouldn't let me eat the bread.
Yeah, that's bad.
You would take the bread away.
I'd slap the bread away. I'd throw it across the room.
Can I just have a piece?
Okay. I'll let you look at it. I'll let you look at it like a hungry cat. Okay.
All right.
Yeah. So, but I really want to go back. This is selfish for me. And again, because this is probably going to be my last investor series, I want people to have an appreciation of kind of where I came from. And a lot of where I came from was after, Insperity obviously worked out well, right? It worked out well. And then I learned a lot in many ways from Newtek, and not just as a shareholder, but I learned in the way it operates businesses. And even going back to its small business lending and its SBA program, and the deal flow that you got from banks, and who those prospects were, and why those 7A prospects were coming to you, as opposed to alternate, capital that was available to them, and also why were those 7As, SBA 7A referrals? Why weren't those loans being managed from within the banks? I always thought that was very interesting.
So, I think banks and financial institutions do some things exceptionally well. They make residential loans well. They provide home equity lines of credit. They do credit cards. cookie cutter, like bang, 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 bang. They just bang it out. And for whatever reason, banks have never really embraced the small and medium-sized business market. Now, I want to make this comment. The pandemic has changed that. And the PPP program has changed that. Banks have recognized, and the federal government has recognized, Washington has recognized how vital small and medium-sized business is as an engine of economic growth. And I speak to banks, they'll tell me their deposit base from that SMB customer is incredibly lucrative, but they have a hard time funding the loan process for a $100,000 or a $2 million or a $5 million loan. It's not in their DNA. They just can't do it. The utilization of technology has changed that, and fintechs and entities like ours that have given small and medium-sized businesses a secure file vault. Here's this file vault, Mr. or Miss business owner. You can connect your CPA, your controller, and your lawyer. See, as a small business owner, those are your tools that you have to fill the vault up. Why? Because if I'm going to make this loan, I need the operating agreement, I need the secretary certificate, I want to see your leases. So it takes that coordination. So we make it easier by giving the technology, password protected. The business owner connects their constituents to be able to fill the vault up. And we give them a human being to coach them on how to do it, dragging and dropping documents into the vault. That loan gets pre-qualified based upon the documents in the vault and the 5 C's of credit. And then the vault is connected to an underwriter, and in our world, an underwriter puts a credit memo together. The underwriter may make a recommendation to approve or decline, but that's really not the relevant credit decision. That relevant credit decision is made up by the 4 to 5 brains on the committee. So we've streamlined this process of making a small business loan using technology that's safe and secure versus I'm bringing this to the banker making several $100,000 a year. They're going to put the package together. They're going to write up the credit memo. They're going to make a decision, and then they're going to bring it to and that is archaic. It's not the best use of labor. It doesn't use security. It doesn't use technology. And also our vaults today include the insurance policies, the payment processing statements, the payroll information, the insurance policy. It's got all the data in there. So we have a lot of data. So we've really changed and revolutionized the way small business loans are made. So we can do it quickly, efficiently, and look at large quantities and pick the ones that make good credits.
And where do you see the most success within small business happening now?
Whew, boy. The ones that are able to innovate and use technology to squeeze out all the cost inefficiencies. The ones that are able to utilize technology to acquire clients without the old school, I need branches, I need real estate, I've got to advertise on television, I've got to advertise in print. When you think about, the changing times, just look at, Uber and Lyft, for example. I mean, they revolutionized the silly taxi business. Particularly in New York, you have to stand on a street corner and hail something in the rain. So when you think about where we are today, the winning companies are the ones that have really utilized technology to make the business efficient.
But in terms of the request for loans that you're seeing.
Oh, okay.
So what type of industries what type of business people are making them, right? First off, who are they? Are they coming from existing businesses, or are these a lot of entrepreneurs? Are they collateralizing it with their homes, or, how are they doing that? And then what are they investing in? And how much of it is just to bolster their own balance sheets?
We have an economy that is just moving at light speed. And I say that, one geography over another is kicking butt. One industry over another is kicking butt. We've got to look at opportunities that are coming in and decipher And just because you have a lot of loan requests, it doesn't necessarily mean you want to put your money there. For example, I could have a zillion loan requests for convenience stores and gas stations. I don't want to touch them because those petroleum revenues are vital. And if you don't get those petroleum revenues because of the proliferation of the electric car or people driving less, it's a problem. And then people will say, "Oh, but what about the convenience store?" Well, I don't know, Adam. I don't know if you're going to go for a cup of coffee in the convenience store or buy your milk there if you're not stopping for gas. I think you'd probably rather go to some other place. So we've got to really look through a lot of these things. We'll get a request from a restaurant. Once again, if they don't have a really great website, takeout, delivery, curbside pickup, it doesn't work. Business owners, the ones that we are looking for, and the pandemic was a good evidence of that. In life, as in business, you've got to be able to survive random events and bad bumps. That's the key to lending. So when you lend, you just better assume there's going to be a dry period. Well, that's been great. Like if you did that during the pandemic, you survived. For the businesses that didn't have enough liquidity or willpower to survive the 6 to 12 months of downturn, depending upon geography, they're gone. They're boarded up.
So are you seeing a lot of new business creation?
Oh, new business formation like crazy. Like crazy. There's so much money out there. So, unfortunately, for those that have capital, great opportunities to start up fresh look at things. Business is just being done differently. So you don't have that legacy mentality. You're not deer in the headlights. Yeah, there's a lot of money out there. So when we go into malls or we see restaurants that are abandoned, boom, there's money coming right back in. Those spots are not going to be abandoned forever. I won't say the same about office buildings. I just do not see staff. I mean, we see this with they're not going to go back into the office the way they used to. It's just not happening.
And
I don't care what anybody says.
And then so you see, and then let's go forward a little bit because we never even went backward, but now we're going to go forward and we never went backward, right? Is you guys recently kind of reconstituted the entire company. And it was opportunistic at that time. And it turned out to be kind of brilliant, right? We didn't know it was going to be brilliant, but it did turn out to be brilliant. It did.
I have to say, it made us look very smart, despite the fact, well, I'll tell you how smart I am. My chief legal officer comes to me at the beginning of February last year and says, "Barry, this COVID thing, this thing could be real. I mean, people get infected. It's a problem." I go, "Mike, listen, this is never going to be a problem. They are never going to shut New York down. It's never going to happen," in my infinite wisdom. I said, "However, we can't take this chance." So we had about 250 people out of the 420 that did not have home setup, didn't have laptop, didn't have the phone set up at home to connect to the system. We went to immediately buy new laptops. Even in February, there was very little supply. We had to get refurbed. They got done in the nick of time when the administration shut down for that. Remember, I think it was like a 10-day break up until Easter that turned into 10 months.
Now I'm going to tell you, and then we're going to, you kind of neglected to describe how you, what the business was and what it became.
Oh.
But I'm going to say one more thing from that. What I learned from Newtek, because I think it's important, is, with my experience on Wall Street and with my experience on, within Insperity, which did well, and then with Trina, which did actually a little bit better, is, and then I see Milton is here. And Milton is a Bitcoiner. She's awesome. She's awesome. So thank you so much for being here, Milton. But I learned a few things. I learned I had already acquired some part of a system view of being able to walk into a lot of different offices and a lot of different departments, right? But then at big public companies, and then when with you guys, I was able to walk into your office, get screamed at by you, and then I was able to go into the lending office, right? And I was able to go into the merchant processing. And I just found I feel that a lot of people today have lost that system view. So they might narrowly see the world kind of as being a series of cataclysmic events, rather than what I'm asking you about now, which is the health of the startup community. And I know that Janan has made comments there. The health of the lending, right? Because that's you need money to circulate. You need a lot of
Right.
velocity of money.
Right.
I learned a lot about kind of the stresses also of being a small business owner, because you are that person. I mean, you are literally the small business owner of America. You're not an S corp. You've grown well beyond that. You've got a lot of people on your payroll, and you got to keep them fed, right?
A lot of pressure. We have a lot of responsibility. The employees, shareholders, creditors, clients, alliance partners. A lot of people count on us. And Newtek started with 3 partners, $75,000 put into an LLC in a spare bedroom, and we bootstrapped it from day one. And there's less pressure today than there was back then. I think we're near a $600 million market cap, which is kind of crazy. But step by step, you build every day. And this movement to remote work, I think, is going to be it's going to be a big opportunity for us. We're able to hire people in Michigan, in Iowa. Our universe of talent has just been expanded. And for somebody that's always driven to an office or commuted to an office, a half an hour each way, it's an hour a day, an hour each way. So whether you're wasting 10 hours a week or 5 hours a week, it's too much. It's too much. It's wasted time.
So do you see, from the vantage that you have of the economy and of the market and of small business, do you see, I hate to say, kind of the end of the tunnel, right? The end of the tunnel in the good way, because that can go both ways, right? Do you see the good end of the tunnel? Do you see kind of a restoration where people can kind of visibly see an economic health? Are you seeing it right now, and it just hasn't kind of gone into the economy as a whole yet as a leading indicator?
Oh, this economy's going to boom. It's going to boom. There's too much liquidity. And obviously, I speak more from a U.S. standpoint, which I'm more familiar with, but between the fiscal policy and the monetary policy and the checks that are being put in people's hands, it's going to boom.
Yeah.
So I think that the availability of capital, the willingness to take risk, it's all there. It's got all the ingredients for what we've seen over the recent time to continue.
And do you see, from where you're seeing now, in terms of who's asking for loans, the conditions that they're asking for, and kind of their own collateral that they can put up, and their own economic kind of viability of their existing businesses, but then also of themselves, right? Because you have to make that evaluation on a whole bunch of metrics. Do you see that that their economic health hasn't suffered? And are they reinvesting in their current businesses, or are they buying new businesses?
It's both. I mean, I think that because of the payroll protection program, and I don't know if you're aware, but the SBA for existing borrowers, the first round made 6 months of principal and interest payments for the borrowers. So existing SBA borrowers in the first round didn't have to make a principal and interest payment on their debt for 6 months. It's like a capital infusion.
I'm going to stop you right there. Can you explain? And this is what I learned from you guys also, because this is part of you guys. This is us having dinner, right? It's us having dinner, Barry. Can you explain holding the risk of those loans? Because a lot of people probably don't have an understanding about the way it works with SBA loans, what it is, and your role within it, and then how you guys are kind of holding on to that paper, but then stripping it into pieces and selling part of it off onto the street. And then you guys have an appetite for risk, right?
Well, yeah, it's the SBA, which has been around, the SBA, and I'll call it the 7A program, has been around for about 65 years. And it's one of the unique public-private partnerships that actually has worked. I say work from the standpoint that it's, with the government subsidy, it's historically repatriated money to the U.S. Treasury. So the amount of losses that the government takes on the subsidy that it provides to get the funding out is offset by the premium that they get from the borrowers. So when you think about, the role of, government in our life, it's, it's supposed to be a steady hand. It's supposed to help things, but it's not supposed to totally overwhelm and interfere. So the SBA program is a risk sharing between entities like ourselves and the U.S. government. They come in, they guarantee a portion of the loan. We make a portion of the loan that is uninsured but not subordinated. So we have the expertise, we have delegated underwriting authority, we make the loan. It's interesting. People think of the SBA, they rarely make the loans. The only time they make the loans is these economic disaster loans. But the Small Business Administration just provides a stamp, a guarantee, and it's a guarantee that reduces our cost of funds without getting too hyper-technical in terms of how the math works. But we have skin in the game, we have risk. And those loans are on our balance sheet. So we therefore have a vested interest that we make the loan, which makes income, but also that we don't have a loss. And in the event that the business goes bad, we have collateral to liquidate and to minimize the loss. So we've probably historically done in excess of 3 billion of these. We currently have a balance sheet of like 400 million of the uninsureds. That would get matched by close to $1.5 billion of the government guaranteed pieces. We service over 2.2 billion, not including the PPP loans. Including the PPP loans, we're probably servicing close to $3 billion of loans today. So we have a lot of borrowers.
So can you help understand? And because I appreciate your time so much, and I really appreciate everybody else's time. And this is like a finale, so I'm kind of excited about it. When I started this, the Dow Jones was around 23,000, right? And Valina, who I see, was there with me. And I thought people were crazy if they cared too much about Trump or cared too much about Biden, right? You and I were discussing that before, and we've kind of discussed that in the past as well. Because, I do see inflation, and that's going to come up here. But I also see that there's a way to mitigate that, right? And it's all you. Yeah.
Well, I happen to be an old dog that started in the mortgage-backed securities business in 1982, when the Dow, I think, was at 780, and the long bond, the 30-year long bond, was the 14s of 11, and the current coupon mortgage-backed security was a 15. So, I mean, you tell people today that they were like 15 and a half, 16% mortgage rates. They look at you like, what are you, weird? It could, I don't see that happening, but with listen, the Obama Recovery Act was, I think, 900 billion, okay? And people freaked out at 900 billion. That was 10 years ago. I mean, that's like a drop in the bucket when you look at the last two administrations. I mean, I don't know, we're, I think, at 4 trillion now. We're on our way to like $7 trillion of debt in a short period. It's unbelievable.
It is. So there's a lot of questions here, and I want to address them. And again, I want to be so respectful for everybody's time. Street is done. Thank you so much for joining us. And I kind of like that picture. That's cool. Can you see the picture from where you are?
I do see a picture. Yep.
It's cool. It's cool. Thank you again, Street is done, for joining us. Are money printing concerns overblown, or are we due for a U.S. dollar hyperinflation with the Fed's actions? Kind of an interesting question. You're not a Fed guy, but what's your thoughts?
There's no way we're not going to have inflation. And if the Fed winds up buying longer dated securities and growing the balance sheet, at some point someone's got to tell them, you can't keep growing the balance sheet. I mean, it's just, the markets, as you know, always win. And the markets are bigger than everybody or everything and anything. So, yeah, I'm concerned. I'm concerned about this excess stimulation. I'm concerned it will weaken the dollar in a big way. I'm concerned that the tax generating capability of the average American won't be able to service the debt at some point in time. I don't know when that happens, but I mean, I've told people I just wouldn't really want to own a bond. That's just my 2 cents.
And Valina, who's awesome, Valina gave me a phrase. She was actually Investor Series #1, and Valina gave me a phrase I still think about, which is, you've heard of too big to fail. She came up with a phrase that's too many to fail. Interesting, right? And so Valina says there's too much liquidity. Are we going to witness the return of the Roaring '20s?
I don't know. What were the Roaring '20s like, Adam?
I thought they were fun. I had a great time.
You look good for your age, though, by the way. Yeah.
I did.
Experiencing the Roaring '20s.
Not as good as you, though. Not as good as you. So Matt Carter says, contrarian view inquiry, too much leverage can ruin the market for everyone. And you're in the leverage business.
We are. We're, and we're careful about that. When I say that, we've got to manage it. We're obviously relying upon government guarantee, government support. For lenders and borrowers, in the interim, our rates are floating rate. Inflation isn't necessarily a bad thing for borrowers. It's not great for investors that own fixed rates. Our stuff is all floating, but inflation, and I am concerned about it. We're better off so you got two cases: hyperinflation, or you've got stagnation. We're better off in hyperinflation, just from a Newtek standpoint and a risk management. Not that I'm rooting for it or hoping for it, but I'm looking what's occurring. I just think there's too much stimulation. So I think we're going to have inflation. We're going to have rates rise, and I think that that will not hurt our business model. And
do you see that? If it doesn't hurt your business model, does that mean that the economy stays vibrant?
Yeah, I think it stays vibrant. Unfortunately, and people don't understand this, when you've got inflation or hyperinflation and prices are rising or rates are rising, you know who it hurts? It hurts the lowest income sector going, because they're paying more for gas, they're paying more for health. They can't outrun the price increases.
Yeah, it's interesting. I've been expecting VAT taxes. I expect 100%. Ultimately, I expect 100% all-in tax rates. I don't think there's any way to get around it. But that's, there's ways of escaping it for a lot of people, and that's what we're discussing now, right? But for a lot of people, there's not. And no matter how much you try and redistribute, reality is money, and this is, one of the conversations that the Bitcoin people have, money is not what it was when you and I were on Wall Street. We were getting a paycheck. Money is my income is no longer has that type of touchability, right? No longer has that type of frequency of a payroll event, right? And that's true for a lot of high income earners, and it's true for a lot of the way people, have their wealth now. So you don't have that frequency of payrolls anymore that you can capture. People who have very high incomes, it's no longer readily available for the government to snatch through taxing mechanisms. There's just a lot going on. I'm gonna skip around actually, because it's a really interesting question. So Dr. Sexy, thank you so much for joining us. Who's got laser eyes? Do you know what that means?
I don't.
Laser eyes is Bitcoin.
Okay.
Laser eyes is Bitcoin. So thank you so much for joining us, Dr. Sexy. And Dr. Sexy, I know, also has 2 cats. That's all I know. 2 cats, and now I know Bitcoin eyes. So 2 exotic cats. I've got 2 cats. Do you have any animals, Barry?
Animalless. No animals.
I'm going to send you a turtle or something like that.
That'd be fun. I hope a little palm tree in the bowl too.
And then I'm going to check up on it in like a year or 2. Okay. All right. So Dr. Sexy says, since you are working with the SBA, do you help small businesses get their Fed contract number 2?
Yeah, I've actually gone to what the SBA refers to as these matchmaking events where people try to go get government contracts. It's not what we do, but we do work with businesses, and particularly minority women-owned businesses that are interested in these government contracts and show them how they can obtain them. But no, we're not in that loop. That's something that gets done directly with the Small Business Administration.
Here's a question that kind of shifts things up, but this is our dinner, right? This is the dinner. So Clay Space, who just changed their picture, and it's a complete change of topics, but it's interesting, right? It's philosophical. So work was a proxy for social recreation community, which includes you, because you were very much a part of every employee's life, including too much of a part of every employee's life sometimes, right? So work was a proxy for social recreation community. Do you see employees finding new ways to get community? And how do you do that within Newtek?
That's a great question. And I don't have an answer for it at this point. I think that the few times in the course of the last year, and I would say it's probably 6, that I've gone into an office, either in our Boca Raton, Florida office or up in New York, it was, even though there were very few people, it was uplifting. It's like, oh my God, I feel like I'm liberated. I'm talking to people, I'm meeting people, we're having a conversation, I'm sitting in someone's office. So I think that we will go to a hybrid model where we'll get to experience some of that on a weekly or bi-weekly basis so that people can coordinate and communicate. I do think you get a pretty good feel from these Zoom or team meetings or devices that you get to see people, and we use them very frequently. But that social interaction, you can't replace it. I mean, it's not going to zero. It's going to some subfraction of 50%.
There was a question here, and I want to be responsive to it because it was kind of for me a little bit, but for you also, because I'm going to throw it at you also. So I'm going to find it. And the question really has to do with how I see sales changing. So I think it's right here, right? Steve Petty, and thank you so much for joining us. And I like that image. Those might be Bitcoin eyes. I don't know. But so I would like Adam's response to salespeople becoming extinct. And I'm going to ask Barry about that also. But first, I will say that I think some salespeople will definitely become extinct. But Barry and I came from Wall Street, and Jim Shaughnessy came from Wall Street, and a lot of my friends came from Wall Street. So we've already gone through extinction events. We've already gone through meteors crashing into Earth and killing the dinosaurs many times. So I definitely do think transactional type of salespeople are going to have a very difficult time. But that's transactional. I don't think that's going to be the case for high premium kind of intangible people selling intangible type of products. Those are high premium type of products where there's not a lot of velocity. And I think that human interaction, intimacy is always a premium product. So I think it really depends on what it is. If it's a high yield, high margin professional service, or example like a car, right? It's going to require that human interaction because you're asking somebody to pay more for something that's not on a spreadsheet, right? And people are willing to pay more for human intimacy. We all do. I'm sure Barry does, and your kind of human life that you'd rather see people, right? I'm certainly willing to pay more. Nancy, do you pay more for human interaction? Nancy doesn't. I already know. I shouldn't even ask her. She's going to mess everything up. She's going to mess everything up, right? But so I think that if it's a high premium type of thing, the IBM sales model will always apply. We want the best. We're going to pay the best. We're going to make sure that they're our most highly compensated employees, but that we're also not paying them enough to get rich. We're paying them enough to earn a living. So I think that the Dwayne Reed transactional type of people are gonna have a very difficult time. It's just sad, but it's true. But those are the same people who refuse to wait online at cashiers at their own stores. So I have kind of mixed feelings about it. So for them, the transactional, where there's just a lot of velocity, you can't capture that type of velocity from a human. You can't arbitrage that, right? But when it's a high premium product and a high margin product, and the company's brand is a high fidelity type of brand. In that instance, when it's a high fidelity type of brand, the way that company distinguishes themselves from a product that's more of a convenience product, let's say the distinction between a Bentley, because my friends own, General Atlantic Partners has Bentley and Rolls Royce, right? Between a Bentley and a Tesla, even, right? Is one's a high fidelity product. The Bentley and the Rolls Royce is a very high fidelity product. Their business model they can never be a Tesla. They can never be a Chrysler. It's an entirely different business model that they can't just flip a switch and hire a couple of people and fire a couple of people and become that. The entire integrity of the organization, the way it's built from the ground up and the top down, they're two completely different business models. One is a high fidelity, the other one's a high convenience. So I think for high fidelity businesses, they're going to be able to capture more of a premium now for the human intimacy. I think it becomes more of a premium now, almost like a valet type of thing. It's a very unusual type of thing. But if you're not that, it's going to be difficult. Barry, I talked a lot. What do you think? Am I right?
No, you're 100% right. And sometimes I think about the things that come out of my mouth and say, did I really say that? When I say salespeople are going to become extinct means like they're all dead. And that's not what I mean. I agree with you 100%. I think of a great M&A banker using a Wall Street experience that can wake up in the morning, read the Wall Street Journal, and have 3-4 great ideas that really work and make sense versus you call it transactional, which I agree, an order taker. So as somebody that managed 2 institutional sales forces in Wall Street, and you had the 80-20 rule, you had salespeople that were just order takers, and that's all they could do. There was no creativity, there was no value add, but there's always going to be room for professionals that can add value. Think of the legal profession. Real estate closings. You really don't need a lawyer to do a real estate closing. Look at LegalZoom, for example. Lawyers used to do that stuff. Accountants, now you can go online, get all the paperwork. On the other hand, you have a really difficult legal issue, you need somebody that's really good. But what technology's enabled us to do is to take things that are repetitive, pedestrian, don't require any thought process, and removed that human interaction. Look at Rocket Mortgage. I mean, it's on the mortgage lending business used to be all people pushing paper. Now you go online, a couple of clicks, you have a loan. So, but there will always be a need for humans that can actually add value in a sales or technical capacity. So Adam, it's always going to be a place for you. I don't know about me, but it's always going to be a place for you.
You're awesome. You're awesome. So hold on, we got more. So Darla Shine, who I know sometimes is in the Hamptons and I think we've encountered when her family is there, Nancy and I aren't, and so forth. But we got to make it happen. Who might even be in Florida now. So Darla Shine, thank you so much for joining us. And Barry, you mentioned the real estate market before, right? And that's a good deal of what the lending that you do. Darla Shine asks, what about the real estate market?
So when you say we're involved with it, we take real estate as collateral. So when we're lending money to a business, the business has got to repay the loan. The real estate just reduces our severity in the event because it's owner occupied. So unlike what I'll refer to as a CRE lender or an investor lender, where the tenants, whether it's a multifamily property or a hotel or an office building or strip mall, it's those multi-tenanted facilities that are repaying the value of the real estate. So, am I concerned about real estate values? Yeah. In the commercial space, absolutely. Primarily because rates are so low. You got low cap rates. It inflates the price. And you've got a lot of transition going on where offices and retail strip malls, they're going to have to be retrofitted. Residential, hot as a pistol, particularly in the United States. Everybody wants to come to the United States. There's an insatiable demand for homes. People want to be here. So I think residential real estate is going to be on a tear. Housing will be at a premium. I worry about the commercial end of the market, particularly office and retail?
There's a lot of volatility there, and I discussed this with WeWork, where I was anticipating WeWork to go belly up. I remember Broadway Real Estate Partners, which is something I was very involved in for a couple of years, and how much sensitivity they had to rates. And what they were having to do was, once you buy a building, for example, the mess that Jared Kushner got himself into at 666, is when you acquire a building, the first thing you've got to do is you've got to knock on every tenant's door and lock in a long-term lease with, and even if there's only the tiniest bump in their rent, you've just got to lock in a long-term lease. If they had just signed a 5-year lease from the previous owner, now you're going to knock on their door and you're going to ask for a 10-year lease. And 666 wasn't able to do that. I'm sure everybody in New York knows that building, right? It's kind of it's a story.
It's got the special number. Yeah.
It's a storied building. Even before the Kushners bought it, it's a storied building for a whole bunch of business failures and kind of why is that phenomenon type of building. It's really interesting, right? It's like the Amityville Horror House, right? You'd walk by and you'd be like, "Oh, it's spooky." So I saw the volatility. I learned it. What happens when you knock on the doors? You acquire a building, you knock on the door, on the office doors, and they're like, "We don't want to sign the new lease. You're done." And you've got so much interest rate sensitivity. You know better than I do, but you think that business doesn't come back.
People don't want to go back to work in an office. Look how comfortable they are working at home. They could work in their Lululemons. They don't have to get on a bus. They don't have to get on a train. They don't have to get in a car. It's so much easier to work out of their house. Why would they want to go back into an office? Cost some money. Why would, I mean, now I say that as an extreme. I'm not saying it's 100% of the pie. I talk to people, I really want to work in an office. Like, most people are going to want to work out of their home. And it's going to be a struggle to make them go back in on a major basis. They're going to go there just as productive. I will tell you, Adam, we have a tool at Newtek called Time Tracker. So my staff is on Time Tracker, and they weren't happy that we put them on Time Tracker during the pandemic. And Time Tracker, and obviously there's all kinds of professions. So we deal with a lot of people that have got telephonic contact with the client, making them loans, providing them all kinds of solutions. But we want to know the inbound calls, the outbound calls. We tape the calls. We have a record of the emails and the texts all in one spot. So if I was managing 20 people, I could come in the morning, go to my computer, log on. I could see exactly what all those 20 people did yesterday. And just like a lawyer, they've got to put in the timesheet, not a description of what they did, but what customer they dealt with within that segment. So if I'm a good manager, I can get the maximum efficiency out of my staff, and my staff should know that at any point in time, I can check on them to see what they did.
The world is changing. The world is changing, but you see, but you're seeing, and it was what Darla was asking. I just can't find the question again right now, but you see the value of these homes. I mean, you're actually having to measure the value of the homes and have some type of anticipation of, are they going to go up or are they going to go down?
Housing is important. In addition to being important and providing you shelter, you now earn a living out of your house in many instances, and you need room to be able to do things in the home.
No, what I meant is when you're doing lending. When you're doing lending and it's asset-based and it's collateral and it's homeowner occupied, so are you having to do some type of assumptions on going forward the value of that home?
No, so when we lend to the business, we lend on the cash flows, and the cash flows are the form of repayment. The collateral that we take in, and we prefer as much collateral as possible, only reduces the severity. So there's no income coming out of the home, or frankly, there's no income that would even come out of the commercial real estate or the equipment or the inventory. That just reduces our severity in the event we have default.
We're going to go on to Valina. She's got a question. And then we're going to start closing up. Can you believe that? Because your girlfriend is going to kill us, right? She's going to kill us.
She is because the lamb chops are in the next room.
Oh, really?
Oh yeah, I got lamb chops.
So you do have pets. So Valina said, what are the three main sectors to launch a startup in 2021?
Well, I guess the question. Okay, let me back up. This would be somebody that is thinking about it from an equity side, I assume, not a debt side. Um, boy, oh boy, I think that one would be cloud services or cloud solutions. In other words, being able to relate to businesses and bring them into the cloud. That's the biggest growth segment in the market. There's a lot of work to be done there. So that would be one area. The second area, I believe, would be digital currencies. And it could even be, and this will bring a smile to your face, the Bitcoins or the cryptocurrencies. I think that the evolution of being able to transact digitally, this is why the PayPals and the Squares and the Visas and the MasterCards are going through the roof. So those are two hot areas that I see. Now here, this is going to be a weird one. So if you're thinking of like really, really inexpensive, this is way out there, the banking industry or the insurance industry. They're very inexpensive. They're the bastions of data warehouses. In other words, nobody has more data than a bank on a customer or an insurance company, but they're classically archaic and they haven't monetized themselves. When those entities get reconfigured and are able to monetize themselves, they'll be unbelievable powerhouses.
Somebody had mentioned digital currencies, and I don't really understand that as much. I'm going to be doing a Bitcoin special, right? And Milton, if she's still here, knows that it's something I'm very interested in. And there's a question here, and then we're going to start winding up, right? There's a question here because your lamb chops, right? I want to make sure you go. But that's horrible.
Don't forget the rice pilaf.
Oh boy. Okay. There was some questions here. Actually, while I look for that question, do you mind if I just put this up? It's kind of like a social type of thing.
That's right.
That? So Sean is the man says, where in Brooklyn are you from? Marine Park, Sheepshead Bay here, which is also where Nancy's from, right?
Forget about it.
Yeah. Where are you from?
James Madison High School, but my home was technically Sheepshead Bay.
And your family owned that
Faymart.
Was it Nellie Bly or something like that?
No, that's the amusement park. Faymart stores, Faemart. Yep.
Yeah. And so there was a question that I wanted to close up with it because it did have to do with digital, and I didn't realize. Actually, there's another question that I wanted to close up with. So Rising Serpent, and this is really based upon your own kind of experience having hundreds of employees. Rising Serpent, thank you so much for joining us. Says work from home will cause burnout since there's no downtime associated with driving, lunchtime. It's always my experience. I've worked from home for 15 years. Are you finding that? Well, you're a workaholic, so you don't even count. But
there you go.
I know. But for your employees, have you seen that as a problem now? Do you see it as a problem when they're emailing you at 11 o'clock at night and you wake up around 5? So if they're emailing you at 5 in the morning.
Yeah, we've had some employees that have quit because they're burnt out. They're burnt out because we have a never-ending supply of things that we could feed them. Now they could stop. We don't make them continue to work, but I've had some employees that don't know when to stop, and they've got family members that just say you've got to quit. They don't know when to stop.
We're going to close up on a couple of questions because I know you want to do that, and it's horrible. And I don't even want to do it. We're going to keep going because it's the humanitarian and it's the good thing to do. We're going to keep going. So Pizzone says farmer sales needs in person. Interesting, right? It does, especially because they're screwing us. So Jake Logic, Adam, stock or business appreciation pay for tier 1 real estate works better in inflation. Barry, your thoughts.
Stock or business appreciation pay for tier 1. Do you understand that question?
I don't. I was hoping you did. Well,
the only thing I could say is if you have a piece of real estate and you could finance it with long-term low-cost fixed-rate debt, that's a win. Anything that you can finance with long-term, low-cost fixed-rate debt is a win. So I think that was the genesis of the question. So I mean, if any like you're refinancing your home at a 2.5 to 2.75% interest rate, fixed for 10 or 30 years, huge win, huge win. Even some of the real estate areas that I discussed that you can finance with low cost, long term, that's a huge win. Anything you could, businesses, borrow everything you can, long term, fixed rate, low cost.
We got two more questions, then you're going to go. And I don't really want to let you go because, the whole lamb chop thing. Nancy, yeah. Am I right? Yeah. Okay. So Ramsey the fourth, right? Or IV. So it says, are you encountering more older business owners who want to retire but can't find a good buyer?
We're not. There's plenty of people that want to buy businesses. The business brokerage business is booming right now for small and medium-sized businesses. So you can go on entities like BizBuyNet or Transworld Business Brokers, and there's tons of businesses for sale and tons of buyers that have capital they want to deploy.
I want to close discussing Newtek. Would that be all right? Because we haven't discussed it at all, and I've let you get away with not describing it at all because we're it's like
it's a salamander. It's a salamander. It's not a lizard. It's not a lizard.
I hated that logo type of thing. So I really did. I really did. And I like the commercials. You would come on, and then when you get off, the thing would come out, and be like, "Hi, I'm good." Okay, so I'm going to ask you a couple of quick questions, and then we're going to go. But it's very important to me. Can you help me better understand how you see what Newtek is when you have your investor calls? One of the difficulties that you've always had, that everybody has, it's not that you've had, but analysts, the way analysts work is they always want to say it's a lender, but you guys aren't really just a lender. Or it's a merchant processor, but you guys aren't just a merchant processor. It's a payroll processor. You guys aren't just that. So you guys are kind of this hybrid of a whole bunch of things, and that creates an issue of having to really educate analysts, right? They can't just say, this is, with Slack, they say, hey, it's TriNet, but it's not that. Or Workday, which is one of my companies, it's TriNet or Insperity, it's just not that. But they can put it into the same bucket. They can use a lot of the same metrics. They'll just strip out some and add others. But with you guys, it's entirely different. So how do you describe what Newtek is? And can you help explain, and a lot of people have noted it, your kind of dividend strategy? Because it's really remarkable.
Sure. So I'll go to the last question because that's the easier one. So a BDC, or a Business Development Corporation, is a 1940s Act SEC company, meaning that it's technically a mutual fund. It's not dissimilar to a REIT. So I know it sounds odd, but Newtek, which owns and operates businesses, is a mutual fund. Mutual funds have leverage limitations, which we accept. We can't be levered. It used to be more than 1 to 1. Now it's 2 to 1. And we have to pay out in the dividend between 90 to 100% of our income in the form of a dividend. So we can't retain earnings. So it's hard for a company like ours that doesn't retain earnings to be able to grow, because you're constantly having to come back into the market to raise more equity, which could be expensive. So as a testimony to the management team and the staff and the board and investors, we have a very high return on equity in the BDC, unlike on any other BDC. Most business development corps trade at NAV or a discount to NAV. As a matter of fact, the industry is like 0.9 to 0.95 currently, up from like 0.7 or 0.65. I think as of today, we're like at 1.7 to 1 NAV. We got as high as like 1.85 recently. And that's because we're able to grow the dividend. So why are we able to grow the dividend? It's because these businesses underneath keep growing. Then when you say, what is it that we do? We provide, just as I said earlier, we provide solutions to businesses that help them grow. Some of our financing, some of our payments, some of our tech, and the global vision. Imagine Newtek in a business that was able to get more leverage than the BDC structure and had a lower cost of funds. That would be exciting. Right now, we're in the BDC. By the way, I should mention, BDCs do not pay corporate tax. They do not pay corporate tax. So our lending business pays no corporate tax. It's a flow through. So the dividend gets taxed at a flow through rate. The portfolio companies actually do pay tax. So our merchant processing business is just like a mutual fund owning IBM. Our tech solutions business is like a mutual fund owning Microsoft. And we value it at NAV. It doesn't consolidate. So it's a little bit complicated. But what's not complicated is our dividend in our history has grown from $1.53 in 2015 to a forecasted $2.65 dividend today. So our dividend's grown by like 6 or 7% a year, every year, like clockwork. What does that do? That translates to an increasing stock price.
It's been remarkable. And then you guys had, and I don't pay attention to my, and I've already disclosed, I have a position in it, and it's not one that I'm suggesting other people. I can only speak of my own investor appetite, right? That's all I can do. And certainly not, it's not meant to kind of engage other people in what I'm interested in. But you guys had a bump as well in the stock, and I don't pay too much attention, to the day-to-day activity of stocks. I try not to be neurotic about it, but I do recall that you guys were getting hit with the rest of the market, right? When the market came down in March, I was looking to see who else was coming down.
Yep.
Because I want to know who was going to rebound. So why do you think that your stock came down? And why do you think it recovered?
So we were, just numerically, first quarter of last year, prior to the pandemic, we were trading 22, 23, something like that. Pandemic hits, and financials get hit, and everyone is overly concerned about small business. And that's what they equate us with, small business. So I think we had a double whammy. Number one, we were a financial institution. Number two, we focused on small business, and turning on the TV, which we've all dealt with over the course of the last year. I think our news media makes Baghdad Bob look good, but
so let me ask you a question. Do you think that people were short? Was it just sellers, or sellers who wanted cash, or do you feel that it was also people who were shorting the stock and taking it as part of an S&P strategy, and then trying to increase their exposure?
We actually had it's pretty silly to short our stock because we pay a dividend, but we actually had one of the bigger short positions that we've ever had. I think we got up to like 1.4 million shares short, which isn't a huge number. It's not like a GameStop kind of thing, but 1.4 million shares and 20 million shares, it's a decent number. I mean, our short now is maybe 100 or 200,000. It's relatively small. Now, why did it rebound? Because people realized that the government came in and helped small business, and that we're a partner with the government. And the PPP program in particular, where we were able to process. See, on a dime, we had to stand up a business overnight to do 10,500 loans on a finger snap. That's impressive. I mean, some people might go, a loan is a loan is a loan. No, these are different loans. They had different software, different requirements, different needs, and I had to finance it. We're not a bank. We financed $1.2 billion worth of loans at a 1% rate of interest. I had to do that in a week. That's good. So I think we're able to demonstrate that, we're a little bit like Rocky. We don't go down easy, and we get back up. And most importantly, we deliver the earnings. In a really lousy year for small business, we delivered $2.09 in dividend and earnings to the shareholders.
I'm going to close up with a thought. You ready for this?
Yeah.
Okay? I remember how much did we used to drive in your car? Remember you used to drive that old, like it had like 300,000 miles on. I was afraid to get in.
The
I was afraid to
Beamer.
get in. Yeah, yeah. It was a really, what car do you drive now?
Close. So, Adam, that car ultimately kicked the bucket at 240,000 miles. The
Yeah.
740 IL BMW. I now drive a 2012 Jeep Wrangler Laredo.
Nice.
Yeah,
Nice.
stick.
Because we come out of Wall Street, right? We learned the
That's
lesson. We learned a lesson. We know. We had good mentors told us, don't spend it, right?
my dad used to say, four wheels in simultaneous motion is all you need.
Yeah, yeah, yeah. So I'm going to tell you a little bit about what else I remember, and then we're going to close up. Right? Is I remember being in your car, and because Newtek was going through kind of the vicissitudes of business, right? Isn't that true? I mean, every business was, and particularly Newtek, because it had a complex business, and you had to educate every analyst, and not every analyst has that kind of tolerance. Um, and it worked out, but that's a difficult thing to do. And you built a company on your back. So I learned two lessons. Same lesson I learned from Burton Goldfield is you carried Newtek on your back. Am I right?
I would say it's fair. I mean, microcap company, nano cap company survived the 08, 09 credit crisis, survived the pandemic. We just don't go down. Company's got people that have the same passion I do to win, to help all the state. We like helping customers. We like helping alliance partners. We're dealing with some of the biggest companies, largest credit union in the world, Navy Federal Credit Union, UBS, Morgan Stanley. We find that to be fun. We like having huge organizations as our partners and showing them we have this really great expertise in this area. People are going to recognize the importance of small business going forward. It's really vital, and our company is all about small business.
So,
That's right.
oh yeah, I interrupted because I'm rude, right? If you had seen a lot of these, you haven't seen any of them. Hallie might have, but I'm rude, right? But if
No,
we were having dinner, I'd be rude. I'd be just as rude, and you'd be just as rude also, right? But so I'll tell you the second lesson I learned. You ready for this?
I'm ready for it.
You used to say this all the time. It's all about the recovery. Do you know you used to say that? Because when things go bad,
Yeah, that's
right?
right.
Because when you're a business and you're a CEO, and these days everybody has to become a CEO, right? Those old days are over. Even if you're whatever it is, you got to become the CEO of your own. It is what it is. But nevertheless, whether you're working for a company or whatever it is, but it's all about the recovery. And you used to say all the time, Adam, America loves the comeback. Did you know you used to say that?
I do, and everybody loses. They lose every day. It's how you deal with those losses and how you come back from them.
Did you pride yourself now looking back, because Newtek has worked out, right? It really has worked out, and you've done fantastic. Changing its model into what it became was just brilliant, into the dividend model, and it really helped you. As it turned out, it helped kind of
It did.
smooth out. It is what it is. But so, do you think back now to all of those times you failed? Because there must have been hundreds of daily failures, just daily failures. I spoke to this person wrong, spoke to this client wrong. I know you're a workaholic, so you reflect constantly, kind of reflecting on these moments. And now looking back to the big failures, but also to the big wins, because you did recover. America really is all about the comeback.
Yep. There were three founders in the company. Jeff Rubin is a name you probably know. A great friend, great former partner. He started his own business outside of Newtek in 08, 09. We go back and look at the 20 years of history and all the times we died and came back and had problems, and that's just part of life. Life is all about how you persevere through those trials and tribulations and challenges and get past them and slay the dragon, right? And it's fun, and I smile at them. And look, we've had situations fairly recently that were difficult. Our chief accounting officer took another job in February. It's like right before the case coming out. It's like, well, Chris, can you wait a little bit? No. It's like you he had to go because they needed him. He went to work for a SPAC, and they needed him to get the deal done. And it's stuff
He had
happens all
public
the
company
time.
experience. Yeah, he had public company experience, so they need him on the sheet, right? Yeah.
That's the way it is. No, but we always figure out a way to get through these things, and that's important. That's a great lesson in life. I teach that to my kids and to people I work with. I listen. I kind of view myself as a teacher, a mentor, a coach, and I have fun every day. Thank God, and it's a total blessing.
Barry, I gotta tell you, I'm just so happy to be. We're gonna be closing up in just a moment, and I'm just so happy to see you. Do you know that?
Can we do this? Can we do this tomorrow again?
Can you imagine? We'll
when
do
I
it.
don't have the lamb chops waiting, but I would like. I had a lot of fun.
Well done. We're gonna do this at least every 4 years. Nice, right? Nice, right?
Can we do it sooner than that? It's all right. 4 years.
I missed you, man. So I'm just so happy to see you. And I tricked you because I said an hour and it's an hour and a half. These things have gone on for 4.5 hours. So you're getting away. You escaped.
I listen, my girlfriend's in the other room. I've got to get to those lamb chops because I'm going to get killed. But this was fun.
It was. Barry, I'm going to hang up. We'll follow up by email, or we'll have a call offline in a couple of days. You're the best, man. I really do appreciate you, and congratulations for all your success. I learned a lot. I wanted to share those lessons with people. Most importantly, some of the lessons I learned were in the car when you said America loves the comeback. It's an important lesson, and you lived it. So thank you so much, man.
Thanks, Adam. I appreciate it. Bye, Nancy.
I'm going to press a button. Everyone's going to go away. You're going to stay.
Okay.
So just stay with me for 1 second. Barry, once again, and I want to thank everybody for allowing Barry and I to be the guest on your feed. And I know Periscope ended today, so this is everybody's first chance at just exclusively Twitter, right? Kind of fun. Everybody, thank you so much. And I'm going to press the button. Watch this. This is kind of cool. I'm going to press the button. Thank you, everybody, so much for allowing Barry and I to be the guest on your feed. Right? And now.